From the Washington, D.C. area, all empowered citizens need to know about intelligent use of resources, smart governance, inclusive communities, smart industry, and healthy, thriving urbanization. This is Smart Sustainability, the TV talk about shaping a sustainable future in the digital age with Nicolette de Vidar. Cryptocurrencies are an abstract concept and certainly little more than a buzzword for most of us. We've heard about it, there's many unknowns, and it targets where most of us are vulnerable: financial stability and our financial future. So cryptocurrencies, what is it? Who is it for? What are the risks? What can it really do, and who controls it? Our topic tonight. Good evening and welcome to Smart Sustainability. I'm Nicolette de Vidar. Digital transformation has by now become something of a mainstream word for most households. At least we've heard about it, whether at work, in the work environment, how we consume or manage aspects of our lives. Digital transformation has become sort of a bit more tangible than just a few years ago. However, much of it is still abstract. One area that we keep hearing about, but most of us, or actually most of you also know little about, is cryptocurrencies. That is to say, bitcoins and others, along with a myriad of different digital assets, names, and concepts. What most of us want to do is know, how does it affect our financial future, our financial stability, our individual independence and purchase power, our security? How secure are cryptocurrencies? Is it pure speculation? Is there more to it? Why are we having it anyway? And what's the impact on the economy? What happens if we would have a one digital currency worldwide? Is that even feasible? Can crypto digital assets replace the fiat money system eventually? Are we talking centralized or decentralized money? Questions over questions we're going to address tonight. So we have with us Willem Buter, economist, former global chief economist of the Citigroup, as well as chief economist and special counselor to the president of the European Bank of Reconstruction and Development. And he's an original member of the Monetary Policy Committee of the Bank of England. He's currently an adjunct professor of international and public affairs at Columbia University and an adjunct senior fellow at the Council on Foreign Relations. We have Manu Chowdhury, CEO of Dmalink, a leading independent electronic trading, analytics, and market data venue for institutional investments in digital assets, and the co-founder of Definity Markets, an institutional ECN and DeFi marketplace for cryptocurrencies and central bank digital currencies. Manu comes from a background of working in fixed income, currencies and commodities, derivative sales, structuring for Lloyds Bank and the Barclays Investment Bank. He's a tech-focused entrepreneur, venture investor, and, as he calls himself, a crypto NFT artist. We have Ronaldo Pomponet, a pioneer and social entrepreneur from Brazil, who has created the Noon platform, which enables and promotes a different, dynamic, more equitable economic value creation for everyday people in local communities. The system is using stablecoins and has been tested and used in several countries, including Australia, New Zealand, Brazil, and South Africa. Welcome all three of you on Smart Sustainability. It's great to have you all on this very difficult topic. So I do want to dive in because it sounds like we have a lot to discuss. I would like to start with Willem. You mentioned, Willem, it's hard to be a central banker at this time. Why?
Well, one of the real challenges central banks worldwide face is how to introduce as quickly as possible an effectively functioning central bank digital currency that has the appropriate cross-border framework, and as well as the domestic inclusivity that this can provide. And of course, then as a supervisor and a regulator, they have to deal with this whole new world, this exploding of digital assets, centralized, decentralized, crypto, some anonymous, some not, stable coins. These are things that need to be regulated. They need to be supervised. They cannot be left to plod along on their own because there's an inherent financial stability risk associated with all these financial innovations. You have to look at the economic function of these new assets, not at the label that is put on them.
So that sounds in a way that with the inflation going on, with the different cycles and the challenges and the timing, so basically what you're saying is central banks also are going into completely new territory, and do they know more than we do? It doesn't sound like it.
Absolutely. Even if they didn't have inflation problems, even if they weren't forced to monetize government deficits at unsustainable rates, and even if they didn't have massive problems of dealing with financial instability, they still have the digital revolution to deal with. And that would keep them busy for the next few years.
Yeah. So I'm going to bring in Manu now, because Manu, tell us a little bit about Dmalink so we know what it is, so people have an idea exactly how you fit into the picture. What do you do? What does Dmalink do?
Dmalink is a institutional platform for essentially banks and funds to transact fiat foreign exchange and precious metals, and Definity, which is another business that I'm CEO of, is essentially a digital asset platform, again, for banks and funds to trade crypto assets. So I think maybe just for your audience's perspective, it might be worthwhile defining a few terms, I guess just so everyone's on the same page and understands a little bit more about the topic at hand. So I guess in terms of definitions, maybe, for instance, blockchain, crypto are used interchangeably. Blockchain, in the most succinct way of defining it I can, basically blockchain is a database. That is it, nothing more complex. Where the block is the data and the chain is the database. The difference between blockchain and a conventional database is that instead of having one central repository, you have a process where you have a whole bunch of nodes, which are essentially computers that are distributed in multiple locations. That is blockchain. So it's not really that complex. And then maybe, I guess the next thing would be to define the difference between some of these other things. So effectively, Bitcoin was the first cryptocurrency built on a single-use blockchain, and the single use was for arguably a store of value / currency. And then you have the second generation, which is things like Ethereum, which is essentially a multi-use blockchain. So a little bit like your phone has an infinite number of apps you can build either on iOS or on Android. That's basically Ethereum. And in terms of stablecoins basically are collateralized digital assets, usually collateralized by cash or government debt, that effectively represent on a one-for-one basis a fiat currency like sterling or the euro or dollars.
Yeah, but then we also need to, while you're explaining already, let's also explain the CBDC then. How does that fit into all of this? Okay,
so if you think about it like this, Bitcoin is private. A central bank digital currency effectively is issued by, the central bank. But it's, as Willem alluded to before, it's not quite that simple. There's a whole bunch of steps that we need to get to before we can get there. And I think the way to explain this is I think that CBDCs are wonderful in economies where you have an issue with access to banking. So again, in Asia, in Africa, I think it will be an absolute godsend in terms of creating a world where we have more financial inclusion. If I'm being honest, is there much use case in the UK or in Europe? Probably not, unless you want to maybe combine monetary and fiscal policy in real time, which again raises other questions really about what that may create. So I'm a big fan. I'm speaking to a couple of central banks and looking at ways the solutions of really, I think, creating a solution that A, isn't, I guess, too Orwellian, but B, also fulfills a role. So for instance, you, again, as Willem alluded to, you have issues in terms of financial stability, particularly with stablecoins, where the backing is, to be honest, being very, I guess, optimistic about it. It's crude at best, and it's downright fraudulent at worst. If you have, for instance, a synthetic CBDC, which is a stablecoin issued by a central bank, say the ECB or the Bank of England, you immediately take away a lot of the systemic risk issues that we currently face today. So I think there are some major issues and major hurdles in the CBDC world. And I think if I'm being honest, we're probably 3, maybe 5 years away from having a major economy adopt one of this.
So that sounds, it's still a little bit out. I want to bring Ronaldo in because we talked about stable coins. And I think Ronaldo probably can break it down for a lot of the users of your system already that are working with stable coins. Ronaldo, explain to us a little bit about what Noon does and then in what way is it using stable coins. So we have an idea, because that really targets you at home, it targets me, that sort of breaks it down to how can this actually be used in an actual day-to-day exchange among normal people.
Yes, Noon actually tries to address the cultural issue that is the change that is up to come on all those words that William talked about, and we need to get rid a little bit about the concept and go strict what's the benefit of each of those words that we are talking about. So what Noon's tried to do is enable communities that they could empower their own local economy. So it's a software that we actually consider ourselves a community of communities, where every community could define their own currency. But the issue behind all that is to provide normal people an experience of running their own local economy in a way, and using the power of computation and crypto as a concept, not only cryptocurrency but cryptography in a process of authentication of transactions that could bring security for a network. And Noon allows communities to get together and exchange their values among them. So what we are trying to address is to empower local communities, and first of all, and secondly is to help normal people to not be so far from the trends. You know, somehow we actually start doing innovation, and normal people, especially from where I'm from the global south, they are late in the transformation. In order to really set up the system where everybody could come aboard, there's a cultural issue preparing people on how to get ready for the change that are up to come, and people need to experience them by their own. And the stablecoin issue for us is an important thing, as many have just mentioned, is bringing much more lack of getting rid of the speculative part of it, because normal people need to understand that they have $1 on Monday and they could cash out the same dollar on Friday, because they need to bring money, they need to bring food to their houses. So it's very hard if you start a speculative process for people that you actually say that you have $10 on Monday, and then the rate have changed on this special cryptocurrency, and now instead of 10 you have 2, but you were planning to go and shop some food for your family, so you don't have any money anymore. So we are very much worried about the cash flow of communities as well. How can you enable a layer that is going to help what I usually call the reallocation of the fiat currency towards communities. So Noon is under this conversation here. A part that is important for us is try to organize communities towards their local economy.
Mm-hmm. And that actually is, so the financial stability challenge, that brings us right back to Willem, right? So the financial, let's talk a little bit about, I'm trying to get also for our viewers to understand. So we have talked about the cryptocurrencies, we've talked about a little bit about stable coins. Obviously, financial stability is a huge issue. Where in the entire economic spectrum, so to say, does actually a digital currency fit in? Are we still can we envision that so that we still have some actual money, or are we...
Privately,
Yes.
Privately issued cryptocurrencies with a freely determined market value are pure speculative entities. There's no value anchor. They are high-risk propositions. No reason for banning them, but it's also a reason for advising the non-financially sophisticated and those without deep pockets from getting anywhere near them. Stable coins, of course, are supposed to be convertible at a fixed price into some major currency, like the US dollar or the euro. They're supposed to be convertible at no notice, on demand, right, into this currency. That can only be, of course, guaranteed if you are invested completely liquidly into that currency. So a stable coin is like a commercial bank checkable deposit account without the regulations, without the supervision, without the deposit insurance, without the lender of last resort to make this work. Any stable coin is at risk of runs. It requires regulation as a bank.
Okay, Manu, go.
So it's probably a little bit unfair to say that essentially the digital assets are backed by nothing. I mean, what is fiat money backed by? The military of the United States. You know, so since 1971, fiat money is backed by thin air and the promises of government. So, but you've got a valid point. You know, there's 20,000 digital assets out there. 99.9% of them are going to be fake or scams. So absolutely, I'm on the same page. There's a huge amount of issues in private digital money. The reason that I think we need to be slightly more thoughtful about the place digital assets hold. Now, look, I'll tell you about myself. I was introduced to Bitcoin in 2012. I didn't buy any because being a banker, I thought I knew better. And I didn't buy any until 2017, which, by the way, December 2017, if you look at the chart, what a great time to be buying Bitcoin. But what happened was in the interim, I read the white paper and I just thought, this doesn't make sense. I just think this is not a new asset class. This is a scam. I'm pretty much sure this is just technology that's been recycled. But the moment that the penny dropped for me, on the moment I realized actually this is going to create a revolution, was Satoshi Nakamoto, who was clearly, I think a group of hackers, perhaps, I'm not sure who these people were, but whoever they were, they created a digital signature that could not be forged. I looked at this and said, you know, wow, this is incredible. This has huge use cases for things like real estate, for lending, also for the creation of digital money. So that's when the penny dropped for me, and I realized actually Bitcoin was something that would probably be valuable in part of any portfolio. And we fast forward to today, and you know, again, we deal with a whole bunch of hedge funds, a whole bunch of banks, a whole bunch of traditional buy-side fund managers. Every single one of those counterparties is reallocating a portion of their gold holding to Bitcoin, and to a lesser extent, Ethereum.
So
the reason they're doing this.
Yeah. I was going to ask you. So why do they actually
I really want to
invest
object to this notion that there is no such thing as a digital signature that cannot be forged. Anything that can be coded can be forged, right? And so, even if it can't be forged, there is the risk that some entity or group of entities gets control of the majority of the nodes that control the consensus mechanism. So that's not forgery, but that is grasping. So the two problems are, I think, have to be addressed.
That's correct. Yes, absolutely. If you control more than 51%, you can reverse that particular blockchain. However, that's never happened with Bitcoin.
No, indeed, not yet.
Yeah.
It would be a challenge, I think, to do that, certainly in this environment, given where the market cap. So look, I'm not suggesting that this is an asset everyone goes and buys. This is not for everyone, but I think as part of a portfolio, I mean, look, I have a reasonable alternative portfolio where I'm very long of gold, even longer of silver, very long of gold and silver miners, also uranium miners, and also within that portfolio, again, a very small percentage is also digital assets. Principally because I'm slightly concerned with where this inflation is going, and I believe this is going to be a macro inflation hedge over the next 5 years or so. I think also that the point you raised, Willem, about the stable coins, yeah, absolutely, I agree. I think we do need to ensure that we don't have a calamity if, for instance, USDT, for instance, which is issued by a subsidiary of the Binance Group. Again, the audits that have come out so far have been quite alarming in terms of the fact that, again, it's backed not by assets, but by liabilities, which does not make me feel very comfortable. So again, look, maybe the solution, rather than regulation, because again, I'm not a big fan of enriching lawyers, is participation. You know, if central banks want to dominate or control a market, then they need to play in that market. And this is certainly something I'm encouraging of the central banks. There's nothing for them to worry about or be concerned about if they are the active participants. I'll give you, for instance, okay, so the UK government has issued large amount of debt. The Bank of England has bought about £805 billion, which is about 30%. It's sat in the balance sheet of the Bank of England doing nothing. So my thought is, well, why don't we take $1 billion or 2 or 3, notionally ring fence it, and issue a asset-backed stablecoin? I would use this coin every single day of the week, as with every one of our clients, as with everyone that wants to actually trade in digital assets. Why? Because you have a sovereign sitting behind the stablecoin, which is really powerful. Unfortunately, that's not what we're seeing in Europe. We're seeing the exact opposite from quite a few countries. Not all, might I add. Some of them are actually quite visionary in terms of what they're looking to do. But fundamentally, this is something that I think really should be pushed as an agenda if central banks want to have more stability and make sure that we don't see runaway issues with this emerging asset class.
So what do you say to that, William?
Well, I would say that central banks, I think, might well be advised to do something about this enormous quantity of extremely liquid reserves that is sitting there, waiting for the next inflationary impulse to get going. But of course, the way in which central banks can create a digital currency doesn't have to be decentralized stablecoin-like at all, right? It could be a centralized selection of accounts with the central bank, about a decentralized token-based type of asset.
Okay, that...
And these things could still be digital, and they could be manageable on your iPhone, on your laptop, and on your tablet. But it doesn't have to be decentralized and digital ledger based.
Okay, but here we need to talk about something, because that kind of brings us right in the middle of actually who are we talking about with digital currencies and digital assets? And I think this is the concern of a lot of people out there. Are we talking about giving more power if we do have a digital currency for people to use? Are we talking about giving more power if we have a centralized system to the banks and to the government? Or are we talking about, is it a possible way of giving more power to the people? Because I think that's the question between centralized and decentralized. So where does this all fit in? What's the pros and what's the cons? Let's talk about that.
I don't believe there's such a thing as a healthy system of privately issued fiat currencies, right? So I really think that the provision of the monetary standard is a natural monopoly within a given political entity. Globally, unfortunately, we haven't gotten there.
Okay,
and even within national economies, there are still large numbers of people who are actually disenfranchised, even in the US and the UK, who do not have accounts and are just restricted to holding physical currency, which is second-class financial citizenship. But I would not want to move towards a society of competing privately issued currencies, be they crypto or other.
Okay, of course, then the question would come up when you have everyday people, they would say why. So we've been taught all our lives competition is a good thing. So why would competition not be a good thing if we decentralize currencies?
Because there's no natural way to scale and limit the issuance. We've had, what is it now, 20,000 cryptocurrencies introduced, but and there'll be 20,000 more in the next 2 years, at least. So this is a crazy world. I mean, not talking about digital assets in general. I mean, non-fungible tokens, can be claims to any real or financial, physical or non-physical asset. If they can be traded efficiently in a system of regulated and supervised stablecoins, for instance, that would make sense. But the unrestricted private issuance of things, but there is no natural limitation on the process of issuing. I mean, it's fiat money. It's worth what people think it's worth. You can issue it in any quantity if people want.
But we have fiat money right now.
Sorry?
We have fiat money right now. So
Yes,
the
but it
monopolies
is,
with the banks, they can issue whenever we go to Congress, they want to give more money to somewhere. Somebody pushes a button and that's fiat money. So there it grows.
It's scary that the public sector can let its fiat money issuance get out of control. This is why we get hyperinflations. And even if you don't get hyperinflations, you get inflation in double digits, as we will in most advanced economies before long. But one hopes that through the political system, constraints will be imposed on the central bank and the government that limit the issuance of this freebie, of this dangerous concept, useful but dangerous concept of fiat currency.
Ronaldo, what is your take on that?
I have more questions than answers for things like that, you know. First of all I would like to bring the question of what's the privilege for people. I think some of those technologies are coming up to address the issue of the largest concentration of money and power, more than one in the 1% of the world, and normal communities are suffering lack of cash and lack of power and money, and some of those technologies are coming to try to address that. So I think this is the real issue that we are facing in the world, is the distribution standard of wealth and money. So how could this address a new pattern of money, a money distribution system? This for me is the real issue of as climate change, the inequality. So if we do not address that towards shifting inequality, it won't make sense. It's just another toy. Somehow I think it becomes as well a toys for banks, a new class of assets that people will trade and just hang around and start confusing the real issue of the world right now, and people start discussing what's the value of Bitcoin and grow up, go down, and becomes like a trading things. And when we go to reality or normal people are suffering. People are in pressure for their own income. We have problems like lack of work all over the world, and we are shifting the labor market towards robots. There are some structural issues that crypto and all this technology of blockchain is coming to bring decentralization and distribution of value and power. So, and I don't have answers for that, because I'm very, very cautious about how to move towards a sustainable place. So my big question, Nicolette, on that, and I would like to hear from William and Manu as well, is how do you really foresee those kinds of new ways of exchange addressing the real issue, this inequality?
Okay, who of you two wants to answer first?
Well, I think the idea that these decentralized mechanisms could enable exchange between parties that previously were either not connected at all or were connected through a costly intermediary, I think is wonderful. I mean, I do hope that the distributed ledger technologies will turn out to be both secure and scalable, and through some other consensus mechanism than proof of work, which is too energy intensive, also not an environmental disaster. So I think it could really increase financial inclusion for in the first instance for bilateral exchanges, and for more complex bilateral, sophisticated contracts, but for bringing together large numbers of would-be buyers and sellers of a good and service. It's not yet clear that distributed ledger technology, which does the bilateral deals in principle very efficiently, is the right mechanism. We still have to see. I think the next few years will be very exciting. I hope this will turn out to be safe and scalable. But I wouldn't apply it to the issues of private currencies. If you're all going to issue your own currencies, it's not going to be a pretty world.
Can I add a question, Nicolette? I'm sorry.
Sure, go ahead.
We have like in the US and some different places, the cooperative banks. That is a legal model that actually is more close to communities. And the way those classical crypto assets are being developed is more in the speculative process of the big guys ruling up the game. So how can we shift from the architecture of governance of things like that to go more closely to what cooperative banks and institutions that actually are more community based, much more than trying to create another layer of speculation? How can we get more to the real value for people, where people could have their food on the table and dignity from the things they do, instead of those pretty words that sometimes means the same thing, another class of assets?
Manu, you want to?
I think this.
Yeah.
I think the solution to that really is things like DAO, so essentially decentralized autonomous organizations that are community-led, community-driven, where essentially you vote using your digital utility token about exactly those things, the governance of how it's used. I think in terms of how do we empower people, I think one of the best ways to empower people really is again to address issues of energy inequality. 1.2 billion people do not have access to electricity. How do we solve this issue? It's certainly not by printing more money. The solution is quite straightforward. And what I've seen executed very well in some parts of the world are using intermittent sources of energy. So for instance, solar in parts of the world, obviously not like England where there is no sunshine, but essentially subsidized by attaching them to Bitcoin mining rigs, for instance. So what happens there is that effectively when there is excess energy production during the day, it uses that energy to harness essentially the mining of Bitcoin, for instance, and that is then distributed within the local community. That's one of the really powerful things of certainly proof of work. And just to William's point before, 76% of Bitcoin mining uses renewable sources, which as far as I'm aware, is more than any other sector. You want to look at two sectors that are bad for carbon emissions, look at the military industrial complex, the banking sector. I think you'd be surprised by how much they produce. But I think that really is the architecture towards this. I think also, William, in terms of your point of why would you need a decentralized central bank digital currency? Well, because of adoption. Look at the Chinese. They introduced their digital yuan. No one used it. They had to give it away for free, and people still don't want to use it. I think that's an adoption issue. I think also what it does is it's by having a decentralized, lateralized central bank digital currency, what you're also doing is you're adding a very large control mechanism of the central bank to the financial stability of essentially digital assets. I think about your point in terms of will we have another 20,000 cryptocurrencies in the next 5 years? Yes, we probably will. Again, as I mentioned before, 99% of these things are spurious, they are scams. How do you legislate for that? Well, I think that's quite challenging, because effectively, where are these things issued? Where are they traded? If they're not within, for instance, the United States or the UK, then how do you regulate them? And then also the other issue you have is things like algorithmic stablecoins. You can legislate for collateralized stablecoins by saying that you must have a depository license, you must have a license for custody. But if it's an algorithm, it's a mathematical equation, there's no law in the world that can stop that happening. So again, I think there's a level of education that needs to be done with the central bankers, and to allow them to make more informed decisions. And look, I'm speaking to several central banks. I'm a very big fan of engagement. I think central banks have a really important role to play with this. One other issue I have with the fully centralized currency is the destruction of the creation of private money. So you disintermediate commercial banks, that will destroy economies. And that's something that really people need to think about.
You know, Nicolas,
I think that's non-issue actually. If the issuance of a centralized central bank digital currency were to be successful, and if it were to draw deposits from commercial banks to deposits with the central bank, right? Well, the central bank can redeposit the money with the commercial banks, right? So that's not really an issue. The payment mechanism could become more efficient and inclusive, but
the
central bank can simply reinvest.
That wasn't my point. I was talking about the creation of money. Where is money created? Notwithstanding the last 2 years, where is money created in our economy? It's created in basically commercial banks when they lend money. You destroy that by having a centralized central bank digital currency, something we have to be very careful about.
If it is a superior means of transaction, there's no, it deserves to put the commercial banks out of business.
I fundamentally think that's an awful,
commercial
awful
bank,
idea.
they have to fund themselves somewhere else. And as I said, if you think there's a problem with them losing funding to the central bank can simply redeposit the money invested with them by Joe and Sally with the commercial bank that has lost the deposit. I think that's really a non-issue.
I think this is a conflation of two issues. It's not about deposits. So when banks lend money to people like me or to small businesses, which by the way creates 75% of all the employment, that money doesn't come from the deposit base. That money is created. That is creation of private money. Without the creation of private money, you do not stimulate the economy in that part of the economy that is the most important for a country. All you're doing is you're basically putting more capital in the hands of few people. That's the opposite of what we're trying to do.
No, I think financial intermediation will continue even if the means of payment function were to shift completely from commercial banks to the central bank. Intermediation does not require money issuance.
So that really brings up the question also that I wanted to talk. Do we still have a role for the central banks? But before we go there, I know Ronaldo had something to add. So Ronaldo, what did you want to add?
Yes, I think it's actually how do we manage a transition of a world that is going to have multi-currencies. I think it's happening on the marketplace. A lot of the retail market is using much more concepts like rebates, cashbacks, and mileage, whatever, all those kinds of currency that is everywhere in the world right now. That is what I like to also the approach of a complementary currency model where I'm not in favor against. I think we are always trying to think about this or that, and I think it's time to start thinking about this and that.
Yeah, more
because
inclusive
we need to figure out
things,
ways to bring more options for people, where people could have more access to diverse kinds of currencies. Because all of that has a value behind and a purchasing power behind. So for me, currency has this role at the end. So I think it's also important to think about this complementary mindset that the value, the intermediation of our society is something that I actually believe that is going to happen and it's going to grow. If you have a value chain or a supply chain that is not adding value, the ones that are not adding value are going to be pushed out of the chain. So this will provide more power for people, and that's why the consumers are starting to have more power in terms of cashbacks, in terms of rebates, in terms of purchasing power. And I think this is a discussion that is happening everywhere, because at the end, the economy needs to work. Someone needs to go there and buy a coffee and pay their bills. Otherwise, things are not going to work. We're just going to create speculation. And the economy, at the end, the normal economy is not going to work. So I think there's a lot of things happening that we need to be careful that cryptocurrency is just an element of this new system. That actually some of the complementary currencies are based in crypto. Crypto is a concept of encrypted codes that actually generates a kind of security or guarantee that this transaction is really happening. So it's just a set of codes that actually help to provide some kind of trust on the exchange. But I would like to bring up open up the conversation about the complementarity of those new stuff and how to avoid this or that. We're living in a world that's always, and we need to try to bring more to our dictionary, the end. This and that and the others, we need to bring options to the world, because through options, we bring possibilities. And through possibilities, we will figure out new solutions. So this is my mindset. This is where I work with. So I'd like to bring this to our conversation as well, this other approach here.
So
Could I make one point that hasn't been addressed yet, which is for the decentralized, distributed ledger, blockchain-based cryptocurrencies, it is often the case that the beneficial owner of the digital wallets is anonymous. And this makes them an ideal vehicle for illicit transactions. There are, of course, occasions where anonymity serves the public good, where you're trying to transfer money to the Ukrainian government. But there is a serious problem of cryptocurrencies, private cryptocurrencies, enabling crime on an unprecedented scale.
That's just untrue. That's completely untrue. If you look at the stats, the use, and also, by the way, if you speak to the FBI, they are delighted when people are stupid enough to use Bitcoin or Ethereum or any one of the other cryptocurrencies, because they are the most trackable assets in the world. If you give me your Bitcoin wallet address, I can tell you exactly what you bought, what you've sold forever, and what you've done previously.
Not people, but not who. The beneficial owner of digital wallets.
Yes, but we have the regulation of the on and off ramps. I mean, they all follow the FATF protocol. So you don't need to know who that is. If they want to convert it to useful fiat currency, they have to convert it. Every single one of those on and off ramps has a requirement, a reporting requirement. And if they don't use
as long as that means that there is de facto no anonymity, then I'm that concern is assuaged. But
I think we have to be realistic. If I want to go and I want to buy a car, not that I can buy a car for £3,000, but let's say I want to buy a car for £3,000. I can take cash, I can pay that. There's no ID&B requirement, there's nothing.
Same thing. But the same thing.
Yeah, but that depends in which country you are. There are some countries where you can't pay cash anymore.
The anonymity of conventional currency makes it a major enabler of crime and tax evasion. I mean, more than half US dollar bills are held abroad, many of them for illegal purposes. Yes.
Cash is not as anonymous as you might think. I mean, if you look at the old Delarue machines that used to count the money, they are scanned. The barcodes are scanned by the banks. I don't know what they do with the data, but to be fair, I'm sure if they wish to be reconciled, you can follow. Cash is more trackable than you might think.
No.
Okay, but this one,
don't overestimate the tractability of cash.
Yeah, but this one I think is really a big issue though, because I'm a firm believer in anonymity of what you buy and who's buying and what so on. Yes, I understand the crime and all these things, but I do not think that the financial mechanism should be a way of getting society to sort of, basically going down on crime. Because I do think, to me, and I think I speak for a lot of people out there, that you do need to have, this also is part of your own independence, your self-determination, your self-leadership, you're also your own inner authority of what you do with your money and your life. So I think that actually the anonymity of whatever that is, how you buy, what you use, to me is extremely essential and important. And I think this is also part of human dignity, because otherwise, if we have this approach where we have a currency where everything gets tracked and you really, then we have big state, so to speak, where everyone can control whatever you buy, then we have this trust issue that everyone is automatically treated like a criminal. I have a real issue with that. I have a huge issue with that.
There is a libertarian argument for anonymity, right, in financial transactions. But there is a price tag attached to it. And the price tag is illicit activity.
I disagree. I don't think that's the case. I mean, realistically, if someone is funding terrorism or basically running a drug cartel, they're not going to be doing it in clips of $500 or $250 or $1,000 even. You know, the volumes are absolutely enormous. So, and I think also there's not actually enough crypto notional. There's only, crypto has a market cap of $2 trillion. There's not enough money in the world for it to be used for those purposes. So I think, look, I agree with you. I think, Nicola, I'm on the same page. I think privacy is one of the most valuable assets that we all have. And if anything, the last 2 years have taught me that we've lost huge swathes of it. And I hear the argument all the time, well, if you have nothing to hide, then you have nothing to fear. But that's a bit like saying, I don't believe in free speech because I have nothing to say. Well, that's not the point of free speech.
Yeah, because also that brings another component.
Let me add something to this privacy issue, because there are some layers on privacy.
Okay.
Sometimes it's full anonymous, you're anonymous, or it's private. So there is a middle term on that I think it's very hard if everybody tracks what is happening on your network, especially people that are not trading with you. But I think it's very important to run a system that the person that is trading with someone else, you need to know who is it, who's this person is. I think this is very important.
Yeah, but that's personal responsibility. That is your responsibility, Ronaldo, as a business person or as an individual, to check out sort of like, do I feel comfortable in trading with this person? Is it not?
Because this is a general problem of the digital world, the anonymity. People say a lot of stuff, but is this the person? Is this not? Is this a robot? Is this so? And this is one of the crises we have in trust today. Is a digital world is becoming this free speech agenda. Sometimes a little bit confused. And also feature free trading, because we need to have a balance on that in terms of really having. Especially if you run a business like I run, I see a lot of fraud. I dedicate most of my time to just get rid of fraud, because it's becoming the normal culture in the digital world. So it is something that's very tricky, that somehow we need to figure out that identity in terms of transaction, who is buying, who is selling, needs to be best regulated. Or somehow, if you do not have a authentic identity, you cannot run the system. I'm not interested in what you're doing, but I'm very interested that you are the person and you have legal responsibilities on what you're doing. We need to figure out ways on how to really hit this mark, because otherwise we're going to have a market with no trust. No trust, we don't have economy. At the end, this is one of the problems we have today. So we need to balance this discussion, because it goes to complete openness or complete control. We need to figure out a way on where things can work.
Yeah, but I think
at the end, balance is the answer for that.
I would agree with that, Ronald, but I think that also brings up another issue. So we talked a little bit before about sort of giving power to the people, because you want people to have a little bit more input sort of in where the money goes, having more power over the money also. But then there's also, we need to balance the stability of it. So my question to all of you is, so we need stability on the one thing, we want to give more power to the people on the other, we want to have an identity, but yet we also don't want to be controlled. So there seems to be a lot of different issues and everybody says we got to find a balance in there. So when you look at with the institutions that we have right now and the mechanisms that we have right now, can we find a balance? I mean, just looking at the political landscape, looking at how all these things are interwoven, and I think most of us probably noticed that in the last few years, if during COVID we were taught anything, it's that I think a lot of us were de-illusioned, so to speak, with having any trust in politics and political decision-making and whatsoever. So do we have, right now, that's my question to all of you, the tools, the mechanisms, and the institutions in place to be able to even find those balances that we need?
Yeah, I think, Ronald, just to answer your question, I think there is a solution to this. So there's a couple of different angles you can look at this from. One is to have a custodian. The custodian would basically be the intermediary. So you'd be able to trade with another counterparty. In order to have the assets with the custodian, you'd have to be onboarded, you'd have to be identified. There will be no anonymity in this process. And if you're trying to do transactions with people, you want to make sure they are real people and those transactions are legitimate. But I think there's also a world in which you can have trustless transactions. So for instance, if I own a venue or a shop and I'm selling items of low ticket value, let's say it's less than $1 or so, I don't really care whether that person is a real person or not. I care whether their money is real. So in that situation, I think it's far easier. If you're doing a large ticket transaction, then yeah, you probably need to use custodians. So there's solutions to both of these things.
Okay, Willem, what is your answer to that one?
Well, I think a world that is innovating so as rapidly as the digital world is today is an inherently unstable and risky, as well as exciting and enabling environment. And as I said, I do not believe that unsupervised, unregulated financial intermediation, free entry, free competition, will produce anything except financial instability and ultimate disaster. So I do think that the authorities are encouraging innovation, encouraging the introduction of new digital assets, decentralized clearing mechanisms and all that, but they should also make sure that every new activity and every new financial product that's created passes what I call the duck test. If it looks like a duck, if it swims like a duck, and if it quacks like a duck, it is a duck, even if it calls itself a swan. Right? So a stable coin is a checkable bank deposit, should be regulated like a commercial bank deposit. An initial coin offering is an IPO, initial public offering, by another name, regulated as an IPO. So we have to just get the supervisors and the regulators who are necessary to maintain stability, because decentralized, unregulated financial activity does not work. The unregulated, non-supervised financial system is inherently unstable. So we need a much more pervasive presence of the financial supervisors and regulators, including the central bank, in the new digital universe.
Now, you mentioned, though, in your paper, Willem, if I remember correctly, that there is also there has to be an independence from government and was it fiscal authorities? I'm not sure I remember correctly now. To the banks, for example. And is there, what if this is merging more and more and becoming one more and more, so that the whole system depends more and more on the political stability, which I think at this point, when you look, and you can look everywhere around, I think political systems are completely undergoing a big transformation on almost every level, and that's the party systems, that's having new parties, more voices, more extremes, more in the middle. So the political system is extremely unstable. So how can we still have an independent monetary system that is sort of, how should I say that, actually has more stability than what we're seeing on the political side?
Well, we may not be able to have one, and the future could be, therefore, a very scary and unpleasant one.
Yeah.
There is indeed a real risk that central bank independence, not just as a supervisor regulator, but also as the creator of central bank money, as a funder of government debt deficits, right? That goes out of the window, not just in the Argentinas and the Sri Lankas of this world, but in the US, the UK, and the euro area. All I can say is that we need independent regulators and supervisors and independent central banks to maintain financial stability. If you can't have that, you will not have financial stability. And private innovation will not make that problem go away. It makes it, if anything, more dangerous.
We have about 2 minutes left, so I want to very briefly touch on, we talked a little bit about the scamming potential in cryptocurrencies, and that's something we didn't talk about yet. So I want to talk a little bit about, Manu, how can actually, as an investor, for example, how can you evaluate what sort of like a potential strong, good investment versus not falling into the trap of being scammed? And it's got to be quick because there's only 2 more minutes.
Okay, so the easiest, simplest thing to do is look at Grayscale. Grayscale runs the largest investment trust in the world. They run 13 different investment trusts. GBTC, which is available in in your IRA and also your 401k, is probably the safest way of doing it. It takes a lot of time and effort to go through, work out what is legitimate, what is not. They have done a lot of that work for you. So that if you choose one of those, you'll probably not go a million miles wrong in terms of that decision. Everything else, if I'm being honest, I would probably leave to professionals. It is very difficult and there are huge amounts of risks. And again, as Willem alluded to, one of the issues you have is a complete lack of transparency with a lot of these projects.
Yeah. So, okay, let's talk in the last, I need like 1 or 2 or 3 words from each of you to summarize the future ahead. So when we look at where we are today for over, let's say for the next year to come, what can we expect in terms of financial stability, in terms of what to focus on? Let's start. Willem, you're the first one, go.
Well, I think that the risk of material financial instability in the years to come has increased as a result of the spectacular financial innovation that's going on.
Okay.
As always, central banks and other financial regulators and supervisors are way behind the curve.
Okay.
So I do think that we are likely to have some very unpleasant surprises in the years to come.
Okay, Manu, your few words?
I would say that I think if you look at what's going to happen to fiat money, we're going to see some real challenges. But I think the dollar's going to win. The dollar is going to dominate this completely.
Okay.
And I think we're going to see some very interesting moves, certainly in Europe.
Ronaldo, I'm going to give you one more word as well. Do you have something to add? No.
Oh, I think it's give power back to communities. Less abstraction, more reality.
Okay, that sounds great.
We design the economy based in communities.
That's
the technology to empower them.
Yep, that's it for tonight. Thank you so much for watching. Thank you for coming on. Very interesting topic. I do encourage you to stay current actually and look into that because it's really important for all of us to kind of go with the flow and sort of so that we can focus ahead what's coming at us. Thanks for watching. Have a good night. We see you next week.